Hello, everyone, and welcome to the Smart Investor Market Update. And we have been getting a few requests to have some video analysis of what is happening in the market. So, uh, after consulting with my team, we have decided to give investors some more information and some more chart analysis of what is happening in the markets because ever since the year has started, we just finished the first half of the year. January to June has just been completed, and the markets aren't really doing anything in terms of the movements of the stock market. Yes, you hear that the market is up 100 points, 200 points, down 300 points. But if you really look at what is happening, the direction of the market, it is not really going anywhere, and it is getting investors, a lot of investors, nervous and want to know what is happening in the market. So we'll provide some daily analysis of what is going on and follow these markets, especially in this summer period into August, because you tend to have some movement around this time when investors appear to be not paying attention to what's happening in the markets. Okay, so taking a look at and what we'll focus on is S&P 500, the Dow. We'll look at the European markets. We'll also look at gold, silver, the dollar. So we'll give you a macro look at what is happening the major markets, and also we'll look at individual stocks. Folks have written in and asked about individual stocks. So if you want to have your stock analyzed, you can go to info@smartinvestorcentral.com, and all of this analysis will be completely free to you. Okay, so taking a look at the chart action, this is a chart of the S&P 500, and this is the level the S&P 500 was on January 1st. January 1st, 2018, and this is where the market ended on June 30th. So the market is slightly up for the year. It's not really doing much, and as you can see, this is the line where the market will be down for the year. And if we start to trend below this line around the 2700 level, we'll start to see the market turn into negative territory for 2018. And as you can see, the markets have just been moving sideways. We had some movement to the upside, and then we had the collapse into February, and we have been just seeing this channel in action in the markets. Let me just clean up the charts a little. And what this can signify is one of two things. It can be a break where the market is just where the market is taking a breather, or it can signify that we are nearing an eventual top in this market, because you have to understand that ever since 2009, this market has been in a huge uptrend. This is a weekly chart of the S&P 500, and the market started 2009. Market has moved up from this 750 level, this S&P 500, all the way up to the 2700 level. So at some point this market will correct, and what I suspect is when the correction does occur, it will catch a lot of folks by surprise, and it will be fairly strong moving to the downside. A lot of folks don't. A lot of folks want to think the market will go up and up and up and up forever, but that is not the case. And even if we mount a rally from this level, from where we are now, I don't see the market going up much more. We may take out this high here and then go up to maybe 3000 on S&P 500, but we are nearing an eventual top in this market after a 9-year bull market. The bull market is not going to last forever, so let's just be realistic when it comes to the market action. Okay, so some critical levels to look at, and this daily analysis will be keeping you, if you follow this analysis every day, you'll be ahead of most investors. So you won't have anything catching you by surprise uh, when it comes to the markets. Now, a critical level to look at is the 2700 level on the S&P 500. If we close below 2700 and 2650, that could open up a retest of this level, of this 2550 level. And I suspect if the market breaks down below 2550, that will signify a stronger correction, and we could see the market really move to the downside. For the market to continue moving up, we need to take out 2800 by this blue line. We need to take out 2800 and then test the eventual high or the all-time high around that or near that 2900 level. Okay, that's S&P 500. If we take a look at the Dow Jones Industrial Average, we see that the performance of the Dow has been really underwhelming. Where did the Dow start for the year? This is January 1st. The Dow was roughly at 24,000 or just below 25,000, and as you can see, we're negative for the year on the Dow. So while the S&P 500, which is a broader index, is slightly positive for the year, the Dow is actually down for the year. So the major stocks on the Dow are down for the year. The critical level to look at is this 23,500 level. If we close below 23,500, that will open us up to more downside pressure on the Dow. Taking a look at the Nasdaq, which has outperformed the other indices. As you can see, that the Nasdaq has made a new high for the year last week, and the Nasdaq started out 2018 this level, the blue line. So you can see the tech sector is actually up slightly for the year so far. So we're seeing a divergence among the three major indices in the US, where the Dow is down, the S&P 500 is flat, and the Nasdaq, the tech sector, is still moving to the upside. And that's what tends to happen with the tech sector. They tend to lead the market higher, and if the market starts to decline, it tends to go down even more aggressive. So that is something to bear in mind if you own a lot of technology stocks. Okay, looking at the European markets, we see that the German DAX, let's just see what has happened from the start of the year. Let's look at, we started 2017 on the German DAX, or sorry, 2018 start, so we're down on the German DAX for the year, and again diverging from the Nasdaq, and we see that the European DAX or the German DAX is down for the year. Let's just take a look at the FTSE in the UK, which has been doing quite well over the last couple of months. Where did we start in 2018 on the FTSE? We see we started near the 7,700 level. The market is slightly below that, so we are down slightly for the year on the FTSE, even though we had a huge rally in mid-March up until mid-May, which was a fairly strong rally, which saw the FTSE actually go to new heights. So we had a good run in the FTSE. So what's this all telling us? What this is telling us is that as investors on a whole, the market is very uncertain. It's very cagey, and it's definitely something that you have to pay attention to and have to be aware of. Now, these markets could really go down and go down quickly, which would affect your investment. Now, what has been happening elsewhere? Let's take a look at the US dollar index. We see that the US dollar has been gaining ground recently, and we see that the US dollar is up for the year. We started the dollar in 2018. Dollar started off here just around the 92.50 level. We're currently at 94.86, and so we have a slight upward movement in the US dollar. US dollar is seen fairly strong resistance around this 94.80 level, and if we close above 94.80 we could see the dollar rally further. If we fail at this level, we could see the dollar turn down and really lose ground for the rest of the year. Gold market, a market of great interest to people. We see that gold is down and negative for the year. Gold was looking positive. It found resistance up at this 1360 level, and the market has moved down into the 1215 level. Not a huge move down in gold, but we see that the market is moving down into 1215, coming up on support at 12,240. If we do close below 1,240, look for the next area of support in gold at 1,200. A close below 1,200 could see this market move down even further, and will be fairly negative for the gold market. This is a more compressed view of the daily chart. We see that gold has huge resistance up at the 1360 up to 1400 level, and for the rally to continue in gold, or to gain some momentum, we need to see the market close above 1400 level. A close above 1400 would signify a breakout in gold, and we could see a move up higher. Let me just draw the consolidation line here. So as you can see here, we are in a huge consolidation pattern here with the gold market, and this is what gold does often. It goes into periods of consolidation, and consolidation means sideways action, where the market is not really advancing and is not really declining. And what tends to happen is that these consolidation patterns contain a lot of energy, and when the market breaks out of these levels, we have a fairly strong move in either direction. So that's what we're looking out for in gold. So while a lot of folks are negative on gold, they're not paying attention to it, this is the time we need to pay attention to see what's happening. So if the market really starts to rally, you can take advantage of it. Another market that has been moving upwards and was in some consolidation is the crude oil market, where we see since 2018 the crude oil has advanced from the mid 60s up to the mid 70s, and this trend looks like it is going to continue. And to put this crude oil market in further perspective, in 2016 the market was at $30, and now we're at $73. So we have seen this market more than double since 2016, and I expect this rally in oil and the oil sector to continue. So that's something that you can pick and look at, and look at energy related stocks that benefit from the rally in oil. Okay, so that is what's happening on the macro picture. Tomorrow we'll look at some individual stocks, and what you can do is send in your feedback to info@smartinvestorcentral.com. Do you like these daily videos? Do you want more analysis? Tell me what more analysis you want of the markets, and we will try and get it. The people who are on the list, who follow the list, have been asking for this, and now we are delivering. So we'll be interacting more, but this will get more beneficial to you if you can send me your feedback, because without feedback I would know what to say and what you guys really want, what you guys want to focus on. Do you want more commodities based? Do you want more individual stocks? We'll try to mix it up, but what you can do is tell us. Thank you very much for listening, and for those of you who are listening to this via podcast, you can go to smartinvestorcentral.com and sign up for our free report on how to make portfolio gains in any economic environment. Thank you very much for listening, and I hope you have a wonderful